how would you describe the operating environment in the reporting quarter?
The reporting third quarter. The key element of the operating environment has been the availability of the Transfocados pipeline. In Q3, it was 88% availability. That's much higher than our budget availability projection of 80%. Year to date, its availability is 82%. And that's really what's driving some of the things you see. So if you see availability of Transfocados and then higher oil prices, those are the two key elements that have driven our performance.
Okay, just looking at, obviously looking at the top line, 103% increase in revenues, 173 billion. Now, you're coming from a loss of 1.6 billion from last year, if I'm correct.
Yes.
Okay, we've talked about the Transfocados. Talk to us about the Escravos pipeline and the estimated impact this could have when it comes on board.
Just so that you remember that the loss of last year came because 6 months of last year, the Transfocados was not available. So again, just to underscore how important it is that we can evacuate our production. The Escravos pipeline, construction is still ongoing. Our target is till the end of the year to have that commissioned and available as an alternative pipeline to us. So that will simply further de-risk the availability issue in terms of evacuation of our production.
Okay. Could you give us a guideline or guidance, rather, on what we can expect in terms of your full-year numbers overall for the year?
Same thing. Guidance hasn't changed. Between 48,000 and 55,000 BOE. We're just under 51,000 BOE per day in the third quarter. We expect that trend to continue to the end of the year. Okay.
Now, we've been following this story. I'd like you to give us some more insight on the update on the recently signed agreement for the Nigerian Gas Processing and Transportation Company, of course, to acquire 50% stake in ANO, a gas processing company. Talk to us about that.
Well, that's a project we are very proud to be working on with the NNPC. The Nigerian Gas Company used to be Nigerian Gas Processing and Transportation Company. It's now really back to its old name of Nigerian Gas Company, NGC. It's a subsidiary of NNPC, and we are in partnership with that subsidiary to build a 300 million scope gas processing plant in the east of Niger and deliver the gas into the OB3 pipeline that is also scheduled for commissioning by mid next year. We've signed all the partnership agreements with NNPC. It's a project we're very proud of. It's, I would say it's on course.
Impact on the business, what can we expect?
Well, it's a further expansion, that's what I've always said, further expansion of our gas business, of our gas processing, that's our midstream gas business, a further expansion of that, and still keeps us where we've always been, almost responsible for a third of the gas to power in the country. So as you expand, gas consumption, gas offtake in Nigeria, we're expanding our ability to supply into that market.
What about, the regulatory environment, policies that supporting Nigeria's gas market? What are your thoughts on that in terms of how that is either complementing or helping, just, making life easier for you?
Well, the policy, our gas business has been largely willing buyer, willing seller. And so we are supplying into customers that are happy with our delivery of gas, and they're paying us a price that we think is market-driven and competitive, yes.
Okay. Let's talk about the global oil dynamics. I know you've been following oil prices and all that, how OPEC has been trying, on the one hand, to keep the market stable. And, of course, we've heard comments from the Trump administration trying to, bring down prices. But give or take, we've seen oil go up to 86, but now down to somewhere around $74, $73 per barrel. Talk to us in terms of what your outlook is for oil prices and what you're hoping for in terms of how the oil politics play out, the international scene that's between OPEC, the shale guys, and Trump administration, and, of course, a big producer like Saudi Arabia.
The thing about oil price and oil price predictions is one area where nobody has ever been accurate.
Yeah,
when it's trending up, people will tell you about $150 when it's trending up. But overall, I always like to take a long-term global view. And I always believe that oil price, usually on the long term, anchors somewhere between $60 and $70. You will see spikes up and troughs down from that. But overall, that's about where you see it. Because it's about demand and supply, really. The world consumes now about 100 million barrels of oil a day. 15 years ago, the world was consuming 75 million barrels of oil a day. And it's all about the supply and demand dynamics. Now, once there's a threat to that supply or a threat to the capacity available to either oversupply or undersupply that, you will see, spikes, periodic spikes and troughs on the price. But
yeah, you're right.
In the long term,
what we're hearing now is that there are actually concerns about a possible oversupply into the market and even weak demand. So obviously those two factors do not go well. So if that happens, we could actually see a negative impact, on prices. Prices could actually come down. I mean, I've talked to some analysts and they're telling me, although OPEC is comfortable at $70 per barrel, we could actually see prices coming down to $50 per barrel.
I tell you, even at today's demand of, 98 to 102 million barrels a day, the supply situation is still fairly tight. And that's why once you see any geopolitical rumbling around that threatens to take out 1 or 2 million barrels, you see a spike in prices. The capacity, the supply capacity, that is the headroom that is available is quite tight at today's demand levels. So, but I think between the suppliers, OPEC as a major supplier, and the world market, I think it is in the interest of everybody to keep a stable price rather than the spikes and troughs. So as I said, somewhere around $70, if you keep that flat, that should be acceptable to everybody.
Good for everybody.
Yes,
Finally,
yes.
now of course, what happened last year with the Forcados, pipeline, that wasn't good for your business. But going forward, going into the new year, what are your thoughts in terms of, are you confident, are you hopeful that, things will remain quiet, peaceful?
Well, that's more a prayer than anything else. But for us, rather than just depend on prayers, everything stays quiet. We're building redundancies to minimize the risk, and that's why we're involved in the building and commissioning of the Escravos pipeline. So that will complement the transfocados for our business and reduce that. Even in the east, where we're starting now some drilling programs to increase production. Yeah. We're also building redundancy in terms of evacuation of our production. So we'll evacuate both through the Ajib pipeline and the Share pipeline in the east. That's our solution to de-risking some of those problems, rather than just sit back and pray that things will be quiet.
Okay, yes. I wish you all the best. Thank you.